You guys requested it, I'll do it. Today I'll be talking about 5 stocks that you requested. I apologize, it took me about 2 weeks to get this video up. I really wanted to do a thorough research and give you real good value for your watch time. So I hope by doing this, you understand what goes on behind my mind when I research stocks. The first stock we will talk about is Shopify. Shopify is a great company. Amazon tried to recreate Shopify but failed. Shopify has great moat, however every evaluation matrix out there is shouting too expensive. From price to earnings, price to sales, discount calculator, the only way to enter this stock is via technical analysis. And now is not the time. Let's take a look at the charts now. This is the 1 year chart. Let's look at the all-time chart. Look at that. Shopify is like shooting all the way up and it's like at the peak of the mountain. I mean, yes, it can go higher, but I'm not too sure how much higher it can go. So on the charts, it just looks too high for me. If you look at the shorter term, if I were to just draw this chart, connecting all the tops and the bottom, generally I think that the stock will move this way. It will still move down for a little while before it shoots up. So this is called a wedge down pattern, which is technically a bullish sign. As of now, Shopify looks too high to me, and if I will enter Shopify, I will actually draw this line over here. This line over here signifies the break of this stock shooting upwards. So the breaking line is about $180. Personally, if the stock comes near or below $200, that is probably a place where I would put my money into Shopify if I like this company and I really want to invest in this company. $200 is the price that I will be waiting for. Yes, it may take years, but investing is all about patience and not having the fear of missing out. I'm a long-term investor. Let's move on to the next stock request. The next stock request is Qudian. Qudian is an online lender. To be exact, it's a Chinese online lender. Money lenders like banks earn pretty good profits on interest. However, these lenders do face certain amount of risk, default risk. One of the main concerns I have is the customer base. It is mainly made up of subprime borrowers, meaning the highest risk of people defaulting. The next problem is licensed financial institutions are typically risk adverse and will avoid borrowers lacking with credit history. Qudian will unlikely bridge the gap between borrowers and lenders. The only good I see in Qudian is deleveraging their lending business and focusing on the platform. This means less risk and higher margins. The financial of the company looks good, however, the market is not buying to their story. So my take is, Qudian needs to be like an Alibaba. You need to see many lenders willing to use its open platform. I've not seen it yet. However, stock is trading at a heavy discount. This will only be a speculative play if I were to invest in this company. I don't tend to trust China companies with low market capitalization too much. Before I go further in the video, I would highly appreciate if you help me like. It will actually help a lot in telling YouTube to recommend this video to others. The next company is a request from Randy Diver, and he's asking about this Canadian mining company called Giga Metals. Giga Metals is basically a company that does nickel and cobalt, basically their main ingredients in the lithium battery, and he was asking if they have good potential returns because as the world uses more and more batteries, as the world is transiting more into batteries, whether this would actually help the stock price goes up. So here's my take behind this. If you look at the composition of a Tesla's battery, you see mainly is nickel and a little bit is cobalt. The thing is, right now, I don't think it's at 15%. Right now, I believe it's less than 5%. And Elon Musk already mentioned that he's working towards zero cobalt. And in Elon's time, eventually he will reach it. I do not know when, but eventually cobalt is actually not needed anymore. So that might affect the stock a little bit. But however, having said for the short term, let's see what happens. Cobalt is probably the hardest material to get. Nickel, you can get it from anywhere. So as a company, I do not see where does this company has any more advantage. If you look at a Canadian company, the cost of operations will be definitely more than cost of operations coming from less developed countries like China, India, and generally, you know, price has the last say behind most things. So a Canadian company producing nickel doesn't really help much in terms of price. Also, cobalt comes at a price. The silvery metal is expensive, yes, but it also has a darker cost. A long history of human rights violations, including child mining, associated with production in the Democratic Republic of Congo. So Elon Musk actually wants to get cobalt totally out of his batteries. So now let's look at the fundamentals of this company. If you look at this, they were never earning money for the past 10 years, and recently in the last 1 year they did earn a little bit, 0.2 earnings per share, and that is quite pathetic. You see the shares being diluted constantly throughout the years, and last year it was diluted massively. If you look at the numbers itself, the fundamentals of this company, it doesn't look great. I don't see this company worth investment, and it's all about the hype. And yes, in the short term the prices will move, but I know in the long term it's somewhere where I will not sleep well at night if I put my money in this company. Let's go on to the next request from Luca. He requested Alibaba and BIDU stock. Let's talk about Alibaba. First, financials look really good. Business looks really healthy. Competitors, almost none comes close. The evaluation looks slightly overpriced, but it's okay. So now let's check out the technicals. This is a chart I drew for Alibaba, connecting all the resistance points. You see all the resistance points together with all the support points. And if you look at this chart, it has this pattern called a wedging pattern, which is quite similar to the Tesla's wedging pattern, which you always see me drawing last time before the big move. So if you are looking at probably a longer term point of view, a wedging pattern that goes sideways like that, what happens is that the stock is going to shoot up or shoot down massively. You do not know which direction. Wedging pattern shows that the price is squeezing in until it will burst. But looking at Alibaba right now, I do not want to enter this stock right now because there is no confirmation of the price movement. I would like to see probably price movement moving out of the triangle to roughly gauge the entry of Alibaba. Alibaba is still a very good company, but technically right now you can see it quite high up here. Personally, I will not have an entry for Alibaba right now. I would actually wait a little bit longer to see where my entry point will be. Right now, I'm just not really clear. So you need to wait a few more days before you can have a clearer picture. The next stock is BIDU, the Google of China. The stock has been hit due to mainly slower growth and lots of money going into Qi. Qi is the YouTube of China. So the evaluations look super attractive, and let me tell you a secret, I'm holding BIDU shares. Let's take a look at the technicals. You can see that BIDU has just collapsed all the way down, and actually my entry point was just below $100. My entry price was 99.08 or something like that. If you are looking at the long-term chart for BIDU, you see that the stock has climbed upwards and there is a very strong sideways support. So if I'm going to draw a line across, you will realize that it is at a very nice support area. So obviously a quality company, the Google of China, and since it's at support areas, I actually took a small initial position in this stock. If you're looking at the revenue of BIDU, it is really very healthy. It's constantly growing throughout the years. The earnings per share is also going up over the long term. For the shares, there is not much dilution done, and that shows the strength of BIDU. Next is you want to look at the efficiency of the company, and if you're looking at the efficiency of the company, the return on equity is pretty strong at about 20%. So this company is very efficient in deploying their cash. I know it's been a pretty lengthy video, but I hope you find great value in this video I'm doing. Let me know if I can do anything to improve this video. So the last stock we are talking about here is this stock called CRISPR. It is a pharmaceutical company, and outright I will tell you, I avoid investing in any pharma companies. I had a few painful lessons and I'll share it. You see, for a drug to be finally ready for the general public to use, it needs to pass 3 or 4 phases of clinical trials. It's like betting. They sell you a dream of a patent, and profiting from that patent for years to come. However, how many times success has come has a very low probability. When you invest, money is really hard earned and you do not want to sort of bet your money away. That is like a long-term plan for failure. In conclusion, of all the stocks I posted in this video, BIDU looks the best. Again, I will highly appreciate a like. It will really help a lot in telling YouTube to recommend this video to others. This video is all about my viewers and I'm not going to end with bye because of this request. So, bye and Tesla up.